The Dow pulling off another day of gains today. Even as the other indices pulled back, the industrials now at 5 days in a row, on pace for a fourth straight week of gains. And the outperformance extends far beyond just today. This week, this month, and this year, the Dow handily beating the S&P thanks to strength in healthcare and energy. Against the Nasdaq, it is seeing its best month since 2002. Tim, it's funny because we usually say, who watches the Dow?
Well, we tend to poo-poo the Dow. Yeah. First of all, a price-weighted index seems kind of ludicrous to me, and in fact, I think it is. But we know what it means, and we know that healthcare and energy have been a big part of this. Energy still less than a 5% weighting in the S&P. What it's telling me, and I would combine that with looking at the ratio of do the math or do the ratio of the triple Qs divided by the SPY, so Nasdaq divided by S&P, and you can see a Nasdaq that continues to make lower lows against the S&P. In fact, it's underperformed at 13% this year. It's underperformed by about 8%. And the news we've had this week from the generals, whatever. I mean, this is where remember we said value over growth? Well, it's taken some time to play out, but it's no question what we're seeing. And I think if you look at, and one of these days, Carter will probably graph this again because he does it all the time. We're getting near very important support levels on the Nasdaq to the S&P.
All right, we want to get straight back to Apple. The stock is down 1.7%. Headlines out of the call. Gene Munster, what are you hearing?
Melissa, I'm hearing that they're talking about a deceleration in revenue growth from September to December. Those words do not sit well with investors. As I look at my model here, that's what the street's looking for. Previously, the street, they just reported about 6.5% revenue growth in September. A deceleration. The street is at 4% as it stands right now. He did not say it would go negative, so I think when you kind of piece that together, it essentially was guiding in line, but don't like the word to hear deceleration. They also don't like to hear significant deceleration related to the Mac business that we just talked about how strong it was. They probably pulled forward some demand relative to that. But I think that the substance of this, again, is essentially they maintain guidance but used language around it. Importantly, the earnings piece, the profitability, the margin, they basically guided to exactly what it was a year ago. It's probably going to end up being about 43.5%, exactly what it was in December. I mean, just rock solid. But again, in this environment, when you start using words like deceleration, I suspect we're just one question into the call right now. There'll be more questions just to clarify what he meant by deceleration. And I think the numbers are probably going to be unchanged tomorrow morning.
Okay, so deceleration of revenue from November to December, a substantial decline in Mac revenues. Gene, is that right?
Correct.
Into the holiday quarter.
The overall revenue from September quarter to December, deceleration. That's what the street's modeling for going into this. And the Mac down significantly. Mac's 10% of business. But even with that down significantly, they did highlight too, Luca highlighted a 10% FX headwind. But I don't want to give companies credit for it when it's good or beat up for them when it's bad. So I'll just leave that out of the conversation.
All right, Gene, keep us posted. Thank you. Gene Munster.
Thank you.
All right, so all-important holiday quarter, and we are going to see a deceleration in revenue. How do you wrap your head around that, Karen?
Well, I'm not sure if revenue is a post-FX revenue or pre. If it's pre...
Intentionally vague, possibly.
I don't know. That's not good.
Well, 10% sounds like a lot compared to what we've heard from multinationals. Okay, so like intentionally vague, possibly.
Well, they're going to have to fess up. I don't think they're hiding it. I feel like I just don't know the answer. I don't know if that means...
Again, we're one question into the call, so I'm sure there's going to be a lot more details. But right now, it's not positive what we're hearing.
No, and I would underweight the impact of FX. Maybe I'm wrong on this, but for a company like this that's not necessarily paying you a high div, they're not paying you out the cash all the time, although they're better than most tech, that FX headwind, I think, is going to be a tailwind. So that's just, I'm out there on that. I want to hear about real weakness, and that's the start of it.
Where is the weakness? They see Mac weakness. Are they going to see iPhone weakness? Remember, back in July, Tim Cook had said they were not seeing any sort of impact from macro yet. So what is this slowdown attributed to at this point?
I don't know, because 20 minutes ago they were talking about not having enough supply to meet the demand was off the charts. So there is some. Look, Apple's a great company. These are staggering numbers they put up every single quarter. What we try to point out is they're getting rewarded for it in the form of their valuation. And you have to wonder, they're not impervious to what's going on in the world. At a certain point, they fall under the same thing that the rest of these companies do. It's not an indictment. It's just a reality. Now, 130 was the recent low. That seems reasonable to me. I think the fact that it's holding up here is a good sign. But then I would submit you really want Apple to create it because that will probably be the last leg of this thing.
That's the reset.
That's the reset.
Yeah.
Exactly
All
right.